Hello friends, welcome back to another lecture. In this lecture, we will look at the concept of Bollinger Bands. Now you can think of Bollinger Bands like a rubber band. A rubber band has the tendency to come back to its original shape when it is stretched. Similarly, when the price gets too far and stretches beyond the upper and lower Bollinger Bands, then price tends to revert back to the middle moving average line. And this is the basic idea behind Bollinger Bands. Please notice this region in the Infosys hourly chart here. Just note the price is trying to settle down around the middle band, that is this moving average line. And so the price is bouncing off from the upper and lower bands at all these regions. Now the region shown here is the classical Bollinger Bands. The reason these bounces occur is that the Bollinger Bands acts like a dynamic support and resistance levels. And as with price action, the longer the time frame you are in, the stronger these bands works as support and resistance. Friends, many traders use this Bollinger Bands as trading opportunities. Now you must be probably thinking, but how do I know when the bands are about to snap back? Because as we have seen earlier, the price can stay overstretched for a long period of time in a downtrend market, as you can see in this blue region. Well, you are absolutely correct here. And so that's why you must use Bollinger Bands along with some other confluences. But first please note, Bollinger Band strategy works best when the market is ranging and there is no clear trend. As you can see in this Infosys chart, market has no clear direction in this rectangular region. The stock is in fact moving sideways. And just notice how beautifully Bollinger Bands is working. So whenever you see shrink in bandwidth of Bollinger Bands, then you can see this as a Bollinger Bands trading opportunity. As seen earlier, avoid trading the Bollinger Band bounce setup when the bands are expanding or when markets are trending. And always look for Bollinger Bands when the bands are stable or even contracting. Now another point to note here is that Bollinger Bands works best in conjunction with Relative Strength Index, that is RSI. So the best strategy for Bollinger Bands comes along with RSI. In this Bollinger Band strategy, we use following rules. Let's first see for the long trades. Now the first condition in this strategy is that band should be stable or contracting. That is, market is range bound or going through sideways movement. Then second rule is price reaches lower band. Then third rule is RSI comes below 40 level. Then fourth is our target is mid-moving average. Now I prefer this conservative approach since probability of successful trades is really high if you target this mid-band or moving average line instead of upper band. Lastly friends, I generally don't use any stop loss here. I simply exit when price hits this moving average if I am sure that market is still range bound or sideways. But what if sideways movement of market is over and a reverse trend has started? So conservative traders can exit once RSI stays below 40 for the next 4 or 5 candles after your entry. Now this actually means that strong trend has started in the reverse direction and it's better to book loss and exit. Now the chart settings are pretty simple. That is, Bollinger Bands are with default settings, and next this is a swing trading strategy and I use this in daily time period. Now if these conditions are met, only then we will enter into the trade, else not. The only thing you need to keep in mind is to apply this strategy in sideways market only. This strategy works beautifully there. Now just look at this L&T stock chart and notice in all this region there is no confirmed trend. Market is sideways and Bollinger Bands are also contracted. So this kind of scenario is perfect for Bollinger Bands trade. Now please note the price closed below lower bound here and RSI also goes below 40 simultaneously. So we need to take entry at the next candle, that is here. And our target will be simply this mid moving average line which was hit here. Then next we get another long entry here, that is at position 2. Here also the market was in sideways movement and RSI was below 40. And we get our target at this mid-moving average here. Then we get another long trade opportunity satisfying our rules at the position 3. Here also the market was in sideways movement, RSI was below 40, but as you can see, price moved further down and we ended up with no profit, no loss in this trade. And lastly, fourth trade in this chart we got here and target was achieved here. Friends, in my training sessions, I often get this query that how can we identify a market as sideways market? Well, the best way to mark a market as sideways is by just drawing two parallel lines from a swing high to swing low once the Bollinger Band contracts. But don't assume these as fixed lines, but in fact a band, and once the price breaks these price lines, then we assume the sideways movement is over. Next, let's see another example. Now, this is the daily chart of Reliance Industries. Here also, market is going through sideways movement and Bollinger Bands are also shrinked. Now, please see here at region 1 where market closed below lower band and RSI also goes below 40. Thus, this is a perfect Bollinger Bounce entry condition. So, we enter at this green candle here with the target of mid band or this mid moving average line, which in fact got hit here. Then next we got another trading opportunity at this region 2 here. Here also we got entry signal at this point and our target was achieved here. So friends, you can see Bollinger Band strategy works pretty well in range bound market condition or when market is sideways. Though we may get many false signals in plain vanilla traditional Bollinger Band setup, but we filtered out many of these false signals using RSI and created this high probability setup. But a small drawback here is that since we are targeting this mid moving average line as a target and the bands are already contracted during range bound markets, so profit percentage is generally at lower end in this trading setup. Then next, let's see the rules for short trades. Now these are simply opposite of the long trade rules. So the first condition is that bands are stable or contracted, that is market is currently range bound or sideways. Then next we have to wait for price reaching upper band and also RSI is above 60. Then here also target is our mid moving average line. Lastly, here also I generally don't use any stop loss if the market is still sideways or has not broken the parallel lines regions, which I have explained earlier. But still, if you want to use a stop loss, then you can simply exit once the price breaks that channel or the RSI stays above 60 for the next 4-5 candles after your entry. Now if all these conditions are met, then we go short, else not. As you can see in this daily Bank of America chart, market is choppy here. Price also closes beyond upper band here, that is RSI is above 60 there. So this is a very high probability trading setup of our Bollinger Bounce. So we can take entry at this next candle, and for conservative traders, if you want a stop loss, then you can mark it here, that is at top of this confirming candle. Next, our target will be simply this mid moving average line which got hit here. So as you can see, we get some very high probability trades here. So friends, please note in a range bound or sideways market, RSI just touches 60 and falls very quickly, as you have seen all through this rectangular region. Or this channel. But when the real trend starts, then RSI can remain above 60 or below 40 for a pretty long period of time, as you have seen here. This thing in fact I have discussed in depth in my RSI trading course as well. Also note, long back-to-back candles are trademark of breakouts, and so we immediately close this second position when we see RSI is hovering above 60 for next 4-5 candles. We will immediately square off this position in whatever profit and loss we are having. RSI hovering above 60 for 4-5 candles is an indication of trend building and the end of sideways market. So we will avoid all such trades. Again, if you go back to our L&T example which we discussed earlier in this lecture, there also we could have square off position 3 where RSI was hovering below 40 for 4-5 candles. Lastly, I use Bollinger Band setup specially for long trades rather than short trades. So friends, with this I hope the Bollinger Bounce is clear to you. Also, the trading setup using Bollinger Bounce and RSI is also clear.